5 rich girl habits I absolutely swear by, coming from a financially responsible 24-year-old who didn't grow up with wealth but has now built a six-figure portfolio in her mid-20s. 1. Using a credit card over a debit card. There is no way that I'm going to be risking my own money when I buy something. When you buy something with a credit card, you get protection under Section 75 of the Credit Consumer Act. Of course, you have to make sure you pay it off in time, in full. I don't use a credit card because I buy extra things I can't afford. I use it to improve my credit score and to get points and cash back. Number 2, always keeping an FU fund of 3 to 6 months worth of living expenses so that I can walk away from any situation if I'm being mistreated or not happy. But it's really important because I don't want to have to sell my investments, potentially at a downturn if I need the money. Number 3, having a lucrative personal brand. I left my 9 to 5 in September because I wanted to pursue self-employment because my earning potential as a creator is essentially uncapped, and I felt with my work ethic and with what I wanted to achieve from life, this was a much better path. People confuse personal brand with influencing, and yes, while I do influencing on short form by influencing people with products or the things that I talk about, I think being a personal brand is something completely different. It transcends just influencing. It means spreading out your visibility across so many different platforms, including long form like a newsletter, a podcast. This is one of the ways that I'm future-proofing myself against AI because I feel like AI is coming for a lot of administrative jobs. And so having a personal brand that's based on storytelling, my own lived experiences, and sharing my own value for my life, I feel like that's one of the ways that I'm future-proofing myself. Number 4 is always having a clear, tangible financial goal. I don't just make random vague rules like I want to be rich one day. I break it down mathematically. So whether I want to save for a deposit for a home or retire early, these are all numbers that I can calculate and have in mind. So I know exactly how much I need to set aside every month to be able to retire by 40, and currently is sitting at £2,000 a month. But just knowing this makes it so much more doable and makes it more practical for every day. I think you have to set big, delusional goals and then reverse engineer backwards. Number 5, I'm building myself lazy girl income sources. This includes passive income. Now, I know a lot of people say that passive income doesn't exist. Of course, any kind of income requires some kind of work upfront, but you want to create things that basically work for you in the background. The truth is, rich people don't work for money, they make money work for them. I'm building this through things like digital products, templates, or books that you create once and then you can monetize forever. Interest on cash, dividends, capital growth for my investments. Anything that I can do to do a bit of upfront work for long-term passive income, I will definitely be investing in. So those are 5 rich girl habits that I'm bringing into 2026. If you enjoyed this video, give it a like and follow for more content from me.
I feel like she definitely has some good advice. Those are some of the same habits that I have done, um, kind of growing up in the past several years as well. I do agree. The one thing comes down to, I think one comment it has come down to is again, is just not everybody like the whole, building your own brand. Will not everybody have that experience to be able to do that, the lifestyle or opportunity to be able to not have a 9 to 5 job, right? But again, she's right when it comes down to the general aspect of if you want to be extremely wealthy, all of the richest of the richest work for themselves. They don't work for other people. So it is very much of having that entrepreneur mindset. So I think
Interesting.
ultimately, yeah,
Right.
ultimately it comes down to your financial goal. What is success and how much money is enough for you? You're always gonna have people that's like, it's never gonna be enough. And then you're gonna have people that's like, you know what? I'm good with X amount of dollars. Like I'm fine, right? So it just comes down to your ultimate goal. The passive income is very true. Like I'll give you an example. If you are risk averse and you want to keep your money in a savings account, that's fine. But I would say research on a high yield savings account. Don't just do any basic banking account and you have in there, your interest rate is 0.2%, 0.1%. You're getting nothing back. There's plenty of saving accounts you can research online that is the same as just keeping your money safe. It's not going anywhere, but you get a return of say 3 to 4%, depending on where you go and depending on the economy, right? So that is at least better when it comes down to a return in passive income than a few cents when it's just saving in your savings account, right? So it is true. It does happen. There is passive income. There's always extra things you can do to make income as well. I think it all just comes down to what you want to do, what you're capable of doing, and how do you want to work. So there's no free money in life. Yeah.
Yeah, that credit versus debit makes a lot of sense. Like you
Oh
do what
yeah.
people
a hundred
right,
percent.
right?
Yeah.
Yeah.
a hundred
If you
percent.
the point I want to make here is you don't want to use your credit card as a credit card. Ideally, you don't use a credit card because credit card is borrowed money. So ideally, you never want to borrow money. But what you can do is leverage the credit card's benefits, such as if somebody steals money from your credit card, then it's technically the bank's money, so they're going to be a lot more rigorous in trying to get the money back. That's kind of her point about using a credit card to buy something versus a debit card. Because if you use a debit card and that money gets stolen, technically it's your money, it's not the bank's money. So there's a difference in how that plays out. So that's why you've heard in the past a lot of people, if you have that, like you want to use your credit card when you buy things. But the ideal scenario is you use a credit card as a debit card. Like you would only use the credit card where you have money from your debit card to pay it off. So you buy something for $200, $100, and then later that day or later that week, or maybe at least by the end of the month, you go to your debit card account or your debit account, you pay it off. So it doesn't stick on there and you don't get billed that interest at the end of the month. So that part
Yeah.
makes sense. Like I like that a lot. That's good idea.
Yeah.
She talked also about the FU fund. Other people call it an emergency fund. Other people call it a savings like
Well,
savings.
buffer. It's a buffer. I agree. It's a buffer. Yeah.
This one's really hard. I feel like she is definitely implying here that she has a great job that's making good money and she's able to do that. That's great. I think a lot of people can't quite do that, or if they can at a very much smaller level where they can't just be like, yeah, I'm cool. I'll just F you this company and go somewhere else and just spend 2-3 months looking for another job. And I'm not guaranteed to get a job. So I think for a lot of people, maybe that's not as, as like realistic initially, and that's okay. But that's something where I think you need to know that like, you're not alone if you can't do that. A lot of people can't do that. So but you do want a emergency fund. Usually it's called an emergency fund. You do want an emergency fund. And then she talked about personal brand. I think she's kind of implying like a public facing personal brand. I think she's talking about like on the internet, a personal brand is what feels like to me. And that makes sense if you're going down the route that she's going down, where she's like essentially doing YouTube videos and TikTok videos and stuff like that. That makes sense. But I think for a lot of people, your personal brand is like who you are as a person to your peers and to your company and the people you work around, and you kind of uphold a standard, of who you are.
I think it just depends. It depends on what you want to do in life. Everybody can create videos. It's not, rocket science. But do you want to? Not everybody wants to. Not everybody's comfortable, right? I think the mentality comes down to if you're going to create content or you're going to build a brand, maybe it's not content creation, it's a business. Whatever you do, you just have to be passionate about and go for it, right? And then the other piece of having the FU fund, I agree with her. I do agree. Everybody can have a savings and an emergency fund. It doesn't matter how little you make. It just comes down to how much you can put it away based off of how much you make. For example, maybe you only make $1,000 or $2,000 a month. Okay, everybody can afford to put $5 away in an emergency fund and have it accumulate, right? She's not saying you have to put a lot of it away. It just comes down to just put something away. My recommendation is always going to be at least 10 to 20% of what's coming in. Put it away. Pretend it's not there. Have it saved and it'll accumulate. It will accumulate within time. It's fine. But the brand thing is, I think her mentioning, I mean, I understand where she's going because that's where her life is taking her. But I do understand that not everybody's going to be able to have that opportunity or want that. Um, but again, it just comes down to
Yeah,
how you want to create your wealth. Yeah.
exactly. Yeah.